Hi, everyone. I'm Allison DeJager of Bliss Self Storage. Today, we're presenting with Phil Macauley of Cushman and Wakefield. This presentation is intended to last 5 minutes. It's just a brief overview of the industry as a whole from the perspective of Phil, who is a broker with, an estate agent with Cushman and Wakefield. Hi, Phil. How are you?
Hi, good afternoon, Alison.
Good afternoon. Can you tell us just a little bit about yourself and your experience in the industry?
Yeah, absolutely. I don't have to tell you how old I am, do
Mm, we can pass on that. I'm not saying my age either.
I? I won't tell you when I qualified then, but so I joined Cushman and Wakefield in December 2019. So basically, I lead the UK and European self-storage division for Cushman and Wakefield. So our work includes valuation work and brokerage work. So on the investment side. Experience is probably related mainly to Safe Store SureGuard and Storage King. We provide them with their annual and biannual portfolio evaluations, but also kind of keeping in touch with the market on the brokerage side. So understanding what's in the market, what prices are being paid, and how aggressive investors are chasing stock.
That's great. Well, just launching right into those questions. Are there any particular areas of high demand for storage at this time?
I think in the UK, it's most operators and investors do tend to focus on the southeast. Ideally, it'd be Greater London. But I think it's aside from that, but they also focus on the other large conurbations. So in the Midlands, so Birmingham, for example, the northwest could be Manchester, the northeast Yorkshire could be Leeds. And I think the larger conurbations just lend themselves very well. Just due to their natural demographics, density of population, etc., etc. What we are seeing in the market, basically what we are seeing is there's just a huge lack of supply across the whole of the UK. So operators and investors are starting to have to kind of think outside the box a little bit and venture into markets where previously they wouldn't have gone. So perhaps more secondary locations, tertiary. Just trying to eke out areas of the country where there is just a lack of self-storage offering.
Absolutely. How do you think the industry has changed over the last several years? And given what you just talked on, where do you see it going in the future?
I think it's certainly from the operational side of things. I think it's become very much more sophisticated. We're seeing a lot more use, marketing purposes and booking purposes of the internet, Google, for example, etc., etc. We are starting to see a number of low-key managed facilities, on occasions unmanned facilities, which obviously requires access via keypad entry systems, etc., etc. And I think obviously, certainly over the last 12, 15 months, COVID's played a huge part in the market, not just self-storage, but across the whole property sector. And I think it's changed, people's perception and perhaps the education maybe of the, customer base or public. We have changing working environments, so people having to create space in their homes and flats. Here in the UK, we had stamp duty holidays for the residential market. So obviously that proved a bit of a driver for the resi market. We saw increased activity over here. We're also seeing quite a few smaller online retailers, obviously who are expanding quite quickly over the last 12, 15 months and just don't have physical presence and storage space. So they're moving into self-storage facilities and oftentimes setting up an office next door. So it becomes a general logistics operation from a self-storage facility. And obviously, unfortunately, the death rate, has gone through the roof, which is very sad. But obviously, people clearing out houses, then, they have a need for self-storage facilities.
Yeah, that's true. And I understand it's a very competitive acquisition market there. So what trends have you noticed with respect to investing?
I think it's self-storage, but I think it can also be said for other areas of the alternative sector. And we are starting to see, a number of mainstream funds investors who are trying to diversify their investment away from perhaps retail or offices. So they're looking to the alternative sector to do that. And self-storage obviously having performed so well and so resilient over the last 12, 15 months, then self-storage is high on the list. Also seeing quite a lot of new money coming to the market as well. So we have institutional investors already, but we're starting to see an increased interest from institutions, but also quite a lot of private equity and private wealth trying to get into the market.
Yeah, very similar here. It's driving prices up like crazy too. And like you had said, it's bringing, your traditional investor to secondary and tertiary markets where formerly they were really drawn to those MSAs. Um, Before we close
Yeah,
out, oh, sorry, go ahead.
no, I was just going to say, actually, I think you're right. In terms of investors and how their mindset has changed. They often look for shiny new boxes, as most operators would. But they are having to look elsewhere and think outside the box. So
Yeah.
we're looking at potential retail warehouse conversions, car showrooms on occasions. So the market's changing from that perception as well.
Absolutely. Is there anything else you wanted to add, Phil, before we close out? And any questions you might have, Chris?
I suppose in conclusion, really, that the self-storage sector in the UK is in a very good place. We're seeing record rental levels. We're seeing occupancy rates at the highest level for a long, long time, and I think on the back of COVID, I think some of the the drivers from COVID will stay in place. So I think there's still going to be flexible working. Online retailing is going to go on, and I think again, sadly, because of COVID, there's a wider education in the public. They're more aware of the flexibility that self-storage can offer.
Yeah, absolutely. Chris, did you have anything to add?
Yes, Philip, you've mentioned that whilst the awareness and the behaviors of customers are changing, the whole market is increasing, but there is a lack of supply, and so you have to think outside the box. At the same time, you've mentioned that there's many small players coming into the market. Do you think that the bigger self-storage chains, they will consider franchising to those individual private small owners in order to increase their kind of chain coverage?
I don't think so, to be honest. I think that for example, Safe Store, Shergo, Big Yellow, the big three in the UK are, it's a very dominant brand, and for them to perhaps release their brand into the market where maybe they don't have complete control of on the ground operations, I think they'll probably be reluctant to do that, to be honest.
The closest I would imagine that would be is maybe if they considered truly managing it. So they had a little bit more of a stronghold on the operational side of the asset, but I can't imagine, lending out their brand and their brand equity.
Yeah, no, personally, I don't think so.
Phil, would you mind sharing your contact information just in case anybody did want to get in touch, ask questions?
Yeah, that's fine. Mobile number 07584 857 149, and email is philip@cushwake.com.
Great, thank you so much. And then Chris, would you share your contact information as well if anyone has any questions with respect to list self-storage?
Yes, the best contact would be my email address, which is Chris with the K, KRIS @storetrack.co.uk.
Great, thank you so much for joining us. Thanks, everyone.